introduction. Our lesson is based on banking system. Banking system. So these are areas that we need to incorporate in the banking system. We have banking system. We do the introduction, banking principles, banking operation, and then central bank. Banking principles, we do the meaning or the introduction and then the principle. Then banking operation, we will work on the meaning, then operations. Then finally, the central bank, meaning, structure, and the system of central bank. Introduction. The concept of bank traces back 1,000 years to ancient Greece, where Greeks deposit their coins. Other trust individual entrepreneurs who took the money, made loans, exchanged different currencies, and tested coins for proper way. Today's banking system is a bit of different with online banks, mobile payment, even digital currencies. Bank. So what is bank? So bank is a financial institution which accepts deposit and advance loans from and to the public over a given period of time. Banker. Who is a banker? A banker, an employee of a bank or a financial institution who service the financial need of clients. So banking system is a group or network of institutions that provides financial service for us. These institutions are responsible for operating a payment system, providing loans, taking deposits, and helping with investment. Types of banks. So we look at the types of bank. So the following are the types of bank. One, we have central bank. It is usually controlled and quite often owned by the government of a country. So every country must have an apex bank, which is called central bank. Other institution or other countries call it reserve bank. Like in USA, you talk about reserve bank. In India, reserve bank. In Kenya, we refer it as central bank. Commercial bank. These banks play the most important role in modern economic organization. Their business mainly consists of receiving deposits, giving loans, and financing the trade of a country. Exchange banks. Exchange banks finance mostly the foreign trade of a country. Their main function is to discount, accept, and collect foreign bills of exchange. Industrial bank. Industrial bank require capital for a long period of time for buying machinery and equipment. Industrial bank provide this type of mock capital. So they provide lump sum capital for each and every organization. Agricultural banks. The main business of agricultural bank is to provide funds to farmers. They are worked on the cooperative principle. So most of the cooperative banks are agricultural bank, saving banks. These banks perform the useful service of collecting small savings. Commercial banks to run savings department to mobilize the saving of men of small means. Then number 7, we have utility bank. An efficient banking system is absolutely necessary for a country. if it is to progress economically. The service that an efficient bank system can render a country are indeed very valuable. So that's why utility bank is very critical component for banking system. We have principles of banks. So we come to the principles of banks. Now, what do you mean by principles of banks? Now, the principles used by banking institutions to run their operation. Every system has a principle. We have principle which governs accounting. We have principles which governs the operation of every organization. So in banking system or in banking organization or financial institution, there must be a system. And which are these principles? Which are these rules? Which are these conditions? Which are these standards? Which are these norms? Number one, liquidity. The principle of liquidity is very important for the banks. Maintaining particular level of liquid form, which is called reserve ratio, statutory reserve ratio. Solvency. To stay in this competitive market, banks must have sufficient capital. Number three, profitability. The main objective of banking business is to earn profit. So if they don't make profit, then it befits the meaning of being in business. Loan and investment. The main source of profit of banking is granting loans to any individual or organization. Investment is profitable and sound source of income. So we need to have this in mind. When they receive funds from the public, their main interest is now to submit these funds to the public by means of loan. The interest they get is now their earning. Saving. Banks collect funds by creating a saving facility. Service. The success of bank depends on the services provided by the bank. They have different model of services. Efficiency. Banks should operate their business efficiently. In this competitive market, there is no alternative way without efficiency in management. Every efficient banking institution, people will flock where there is efficiency. People will go where there is efficiency. So efficiency is critical for success of every financial institution. The location must be safe. Location. So the location must be safe for the customers. An easy communication system must exist. Remember, we normally talk about marketing mix. Now in marketing mix, we look at place as one of the components of successful marketing tool. Apart from prices, profits, and prices, profits, then one of them is place. So place is critical. When you locate your business in the best place, you will attract the customers where the facilities, where the necessary facilities are available. Then that plays a critical role. Thank you so much. See you in the next session.